Good morning. Welcome to the XM.com weekly market update, and we're with Pete McGuire again, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
I hear congratulations are in order. XM just had their 10 millionth client.
Yes, globally we broke the 10 million.
Yeah.
It's been a big year or big year and a half. We've raised headcount also from 620 to 960.
Wow.
And big strong move, and we're in excess of 1.2 trillion turnover a month. So that gives us some sort of an appreciation global, and very, very strong. It's totally a global brand.
Yeah, it's interesting. Well, they're big numbers from a trading perspective, but that headcount uptick that's huge.
Monstrous.
Yeah.
Yeah, very much so. That was over about an 18-month to 20-month window.
Oh, positive signs.
Positive signs. People are trading, and we do the right thing by people.
Yeah.
Big, fair and human is our tagline.
Well, there you go. Very good. All right, let's get into these numbers. Aussie home loans month on month, interestingly, have gone up over 5% where you look at that chart over a 2-year period where the bulk of it were negative numbers.
Absolutely. Rolling back 2 years there, I mean, that's an extraordinary number. You've hit me by surprise on that. I wasn't expecting it. And that really shows, it shows a level of confidence. And that's a good thing.
Yeah.
Very good thing.
Well, considering where the interest rates are, and there's been so much talk about the pain that there's still an appetite there for the home loans. But interestingly, on the next slide is the building permits.
Yeah.
Now, once again, this is only 12 months, but they are a lot of negative numbers, which feeds into there's not as many houses being built.
Yep.
So there's a supply issue.
Yep. And the rental crisis.
And the rental situation. But
and huge, as you were saying, huge migration numbers.
Yeah.
So where do people live?
Yeah, well, that probably feeds into why the home loans have ticked up a little bit. So, lack of supply, a lack of new buildings, which feeds into a bit more demand coming back into that home loan market.
Absolutely, and just on that, and we've got very dear friends that are in the real estate industry in Sydney, and we talk to them, and we've had them on the program. They're telling me that listings down 35%. So this is another issue. People aren't trading, and so in turn creates even more, I think, angst for every component of the market.
Yeah, and people wanting to sell, they've got an expectation of what they think their property is worth, which is not...
That's fair.
But the property is what someone is willing to pay for it, obviously. Right. But if they don't have to sell, then they don't need to.
No, exactly right. And you've got big transfer costs. As far as like bracket creep, you've now got $1 million property, it's 40,000 stamp duty, 2 million, you do the numbers and it's a hell of a lot of money to transfer.
Yeah, interesting market. So let's head over to the UK. CPI still very high around that 10% mark. And
sticky.
Yeah, we got the Bank of England, they've got their rate announcement later this week, which
they have.
Anticipation is 25 basis points.
Yeah.
Probably needs more than that, but we'll see.
Well, exactly right. 85% probability of 25 basis points, and you're right, you're on the money. It's a long way to, if you look at that line there, the BOE inflation target, the dotted line down the bottom, the black one, I tell you what, the yellow one's a long way from the black one, Andrew.
Certainly is. It was, I know it's coming, inflation's coming down quite quickly in other parts of the world, but it's very sticky in the UK at the moment.
Oh, yeah.
Look at the pound, 126.5. So it's been a good rise since in the last 6-7 months, roughly.
Yeah, remember that day that we came in and it was at 103. It capitulated from 112 to 103. Yep. There was major concern there. And then we've seen just an almighty move to the upside, and it's just been extraordinary, really. So that is a true example of what currency trading's all about. And that's why you have 10 million clients.
Yeah.
That's why people all over the world are doing this. Mothers, fathers, children, and in the sense of over 18, they're all participating because they can see these massive moves.
That's right. Commodities, oil, WTI, it's around that $73 mark at the moment, and it's been sort of hovering in a bit of a range the last few months, but certainly a big move compared to 12 months ago.
Exactly. Yeah, there's a dilemma, and the storyline in that is you can see it going back, if you put your mind to June, July, 125. Now, I've just come back from Dubai and Qatar and the oil and gas industry over there, and what you hear about Saudi, and they're building a $500 billion corridor of cities, they want $85 to $90 a barrel. There is no negotiation. We saw a production cut only going back probably, 6 weeks ago. And there's every chance, I think, I've been around this too long, I think that you'll see a production cut in June. If they don't get prices up, they'll cut production. And this is going to be the dilemma facing the Northern Hemisphere summer. What goes on with hurricane season, you've got huge driving demand because naturally summer holidays, COVID's finished. WHO have come out and said, so everyone's out holidaying. And I think you're going to see big consumption. And if they don't drive price up, I think you'll see movement from the OPEC plus. Let's see how it plays.
Yeah, and it plays into the inflation numbers.
Oh, absolutely.
Gold.
Wow.
2028 or thereabouts. Big move as well.
Yeah, it's been extraordinary. You know, last Wednesday, we had the high was 2,072, I think, 49 cents. And we got to 2,072. We were 49 cents shy of its all-time record. Fell back to 2008, and now it's back at, as you say on the price there, 2028. It's been absolutely game on for all the traders. And when you're looking, if you roll that chart, and I don't need you to, but I can remember it, October was when you saw those big currency moves, and they had gold there at 1630, 1640.
Yep.
You've put on in that time $450 or 25% in 6 months. That's why it's got such a huge attraction globally.
It's
We'll keep an eye on that because central banks are also buying, and they've got an appetite for it, and there's just all over it at the moment.
Yeah, which will obviously support the price.
Yeah, and jury demand.
Yeah. Over in the US, had the rate announcement last week, which was expected.
Yeah.
We've also got the CPI numbers coming out later this week. But
You bet.
there we go. That chart goes back to the GFC back in 2007, roughly. And it's now back at those levels. Now, is that it? The wording from Powell was, we're probably done.
Probably done.
But time will tell you. But you wouldn't think there'd be much more upside on that.
Well, I'm laughing with you, not at you, because I tell you, who knows? All I'll say is this. There's been a hell of a long period of time. If you look at that snapshot of zero or very low interest rate environment, and that just does one thing. It fuels inflation. And that's what we've got at the moment. So I don't know, Andrew. I have no idea how much further it goes. I've seen many reports saying we're going to see 3 rate cuts by the end of the year. Many people hand on heart, some of the big investment banks. So I don't know. I just sit here and just observe. It's an easier way to do it. You don't get yourself into hot water.
I suspect whether or not it goes up a little bit or comes off a little bit, but I suspect the rates will stay probably somewhere between 4 and 5%, or thereabouts, but probably a period of time.
Yeah.
So get back to some normality in the rates market.
We've got the debt ceiling as well to look after. So we're going to see how that rolls. And Janet Yellen saying 1st of June. So today being about the 9th of May, we ain't got long.
No. And finally, US non-farm payrolls last week was over 200,000, which was slightly more than anticipated, but it's a solid number.
Very solid. I was surprised. I saw the number early Saturday morning, and I couldn't believe it. I thought really you'll be around 160, 170. Consensus was 180, and then it shot the lights out. So I applaud it. And unemployment, I think, is around 3.4%. So it's, you've got to say it's relatively strong.
Yeah,
very strong.
Yeah, that's right. All these labour markets they're not flinching.
No. If you want you've got to have a job because inflation, and if you don't have a job, you don't eat. So but everyone that wants a job can more or less get a job.
Yeah.
There's a war for talent. I keep on saying it, and it's tough. It's hard to get good people.
Yeah, that's right. But anyway, we'll keep an eye on these numbers later this week from the UK and the US, and catch up again next week. Yeah,
and on that, I mean, when you're thinking about, we had last week also ECB raise rates. So it's going to be interesting whether they persist like their counterparts in the UK. So we've got a lot of things happening at the moment.
Yeah, certainly have it. We'll keep an eye on things and regroup next week.
Look forward to it.
Great. Thanks, Pete.
See you, Andrew.
And that's the XM.com weekly market update.